What's up, guys? Today I'm going to try to cover the question I get most frequently from first-time investors, and that question is, how much money am I going to make if I buy a pre-construction condo? And of course, any of you savvy investors watching, you guys know if I could accurately predict the future of the market and the timing of the market, obviously I wouldn't be slinging condos. I'd be a Bitcoin billionaire or a Dogecoin millionaire or something. So instead of firing up my crystal ball here and making predictions for the future, instead we're going to look at the past. We're going to look at, if you want specific examples of pre-construction investors, we're going to look at five purchases that happened over the last 10 years and what the results were when they sold in 2021. If you don't like these charts, go ahead and skip ahead. That's going to start later in the video. First thing I just want to cover is this report that came out from CIBC's Benjamin Tal in conjunction with Sean Hildebrand from Urban Nation. If you're not familiar, Urban Nation does a lot of the consulting for a lot of the largest developers in the city, so they have their finger on the pulse. So we're going to focus mostly on the right chart here. All right, so this shows you the newly registered condo investment units. So investment pre-construction purchases that were purchased at some point in the past but closed in 2020. What did those numbers look like? So we're going to focus on sort of these two charts here. The average closing price and the current market value on the resale market. Now, obviously, the resale market has done a lot better in the first quarter of this year than last year. So those numbers might look even better now, but this chart kind of gives us a good baseline. Keeping in mind that a build cycle is anywhere from 3 to 6 years, we can safely assume that most people who closed on a pre-construction unit in 2020, they probably bought it in 2015, 2016, for the most part, right? Obviously, you've got some people who maybe bought before that. You've got a lot of people who bought it towards the tail end of sales, 2017, 2018 type of thing, when there was lots of incentives and good deals. But for the most part, that's when they bought. So on average, their purchase price was $415,175. And their current market value is $595,000. So you're looking at a 43% appreciation in the time between them signing the contract and taking occupancy of the unit, or rather closing on the unit, because obviously closing is a little bit later than occupancy here. So looking at 43% appreciation. So the average pre-construction, you can extrapolate from this, the average pre-construction investor who closed on a unit last year was somewhere between 150 and 200,000 positive equity, depending on where they purchased, when they purchased, and a number of factors, but that's the average. So to talk about crystal ball, if you've ever sat down and met with me or someone from my team, we do pro formas, we do analysis for the future, because people want to know what's the cash flow going to look like on this particular investment unit, and what could I potentially make. Now, what do we use for assumptions? Well, I'll tell you, I've seen some crazy assumptions out there from other brokers. We like to play it a little bit conservative. So the 10-year appreciation average for condos in Toronto is almost 8%. Now, I don't like using that number because we've had basically the best decade ever for condos. I like using the 45-year average, and the 45-year average as far as appreciation goes, you're looking at about 6.1% per year. So into our pro formas, we build in 6% appreciation year over year, because the 45-year average rolls in multiple corrections, multiple crashes, just a more realistic conservative number. Now let's get to the good stuff, what you came here for. Some specific examples. Full disclosure, I didn't cherry pick these. I didn't spend very long. All of this was done on Sunday morning. I didn't do extensive amount of math, all right? I didn't want to get lost in the cents. We're focusing on the dollars here. So you'll notice a lot of the time I'm not including principal pay down. I'm not including positive or negative cash flow. I'm just including the appreciation numbers, net, commission cost type of thing. Trying to keep it really simple. Like I said, I want to stay focused on the dollars, ignore the cents. I can do more detailed videos if this is the type of thing you guys want to see. Just wanted to get through more examples here. So the Duke condos, this is a building in the Junction that was sold pre-construction, predominantly 2014. This particular unit, 842 square foot unit with a terrace facing south, was purchased for $551,000 with a $110,000 down payment, assuming 20% down, back in 2014. Okay, this unit just sold this year for $1 million. All right, so it sold at $11.86 per square foot, which puts it at $449,000 appreciation. Obviously, this building closed 2 years ago, 3 years ago, so there'd be some principal recapture in there and stuff, but I'm leaving all that out just to, again, keep it really simple here. So you're looking at an 81.5% increase over 7 years. which works out to about 8.9% compounding annually. Assuming you put down 137,550 into the deal, which is the 110K down plus 5% for closing costs. When you take that $1 million sale price, you remove your 5% real estate commission, you're looking at about 20.55% return on down payment year over year, which is of course fantastic. Anybody who's in the markets knows that that's an astounding return on your money. That's pre-capital gains, of course. I'm not going to focus on capital gains here because that's dependent on your income level, and each individual person is going to have different capital gains. And of course, stock market, basically any investment returns are going to be subject to capital gains, so I'm not going to focus on that too much here. For comparison, if you had taken that same $137,550 and you went all in on SPY shares, so the S&P 500 back in 2014, at an average of $200 a share, which are now worth $420 a share, that investment would have increased $151,200 on $137,500, and of course here we're showing a $449,000 increase net, $399 after you remove commission. So increase in value of $399,000 versus $151. Obviously, guys, I'm not bashing stock investing. There's a time and place. Obviously, the liquidity in the stock market is above and beyond the liquidity in the real estate market. Of course, you can play with leverage in the stock market. Million things to consider. I'm just for a point of comparison. We've got a unit at Eau de Soleil. This is Humber Bay Shores. So 822 square foot unit with parking. It's got a partial lake view. This was purchased in 2014, maybe 2015, more likely 14, $526,000, so $640 a square foot, which would put them at $105,200 down. This unit recently sold for $925,000 at $1125 a foot, which puts it at an increase of $399,000 or 76% over 7 years, which works out to 8.4% year over year. Another example in Humber Bay here, we've got Key West. So this is 36 Parkland, a little bit removed from the lake, less of a desirable location. New build, I think it's been registered for 2 years now, maybe 3. 965 square feet with parking, purchased in 2015 for $493,900, $99,000 down. It just sold really recently for $885,000, so an increase of $391,100. Over 7 years, so 80% up over 7 years, 8.7% increase year over year. Again, I did not cherry pick these examples. It's Sunday morning. I just kind of grabbed the first few that I saw, and tried to grab one from a couple different neighborhoods, a couple different completed buildings, and what you'll notice is they all fall into about a point of each other in terms of appreciation year over year. All right, Hilldale. Wanted to throw in a luxury example because, I get a lot of people who tell me they want to buy the smallest units, the studios, the one bedrooms, the junior one beds, the cheapest stuff, because they think it appreciates the quickest, which I understand the rationale because it's the bottom level of the market. It's the most affordable area of the market, so it's most likely to see upward pressure as affordability decreases in the city of Toronto. I get it, but really good units and really good spots can do really well as well. So Hilldale's at 1 Roxborough, so Roxborough and Yonge. This is an 1863 square foot unit with parking. It was purchased in 2016 for $2.789 million, which would put them at $558,000 down. Obviously not a very accessible investment unit, not something most of us are going to be looking at from an investment standpoint, but there are people looking for those special units. They want to invest in landmark real estate. This is one of those. This was sold in January of 2020 for $3.89 million, over $2,000 a square foot, which puts them at an increase in $1.1 million over a 4-year period. So you're looking at 8.6% year over year. All right, M5V. So I wanted to add in an example of a longer term hold here, a condo that was held for, those other examples we looked at were people who sold within 2 years after the building completed. I wanted to look at someone who held a lot longer than that, but bought it pre-construction and kind of look at what those numbers looked like. So this is a 410 square foot unit with no parking. It was purchased in 2008, 2009 for $245,000. Obviously, not the hottest condo market in the world, 2008, 2009. It was the height of the financial crisis. Pre-construction units were relatively hard to move. This unit would have been $49,000 down, and it was sold recently this year for $541,500. or $13.20 a foot. So you're looking at an increase of just under $300,000 over the span of 13 years. So 121% over 13 years, which kind of follows the adage, real estate doubles every 8 to 10 years. Works out to 6.3% year over year, which is in line with what I said the Toronto's 45-year average is, which is 6.1% year over year. And let's look at some numbers, assuming you bought this condo, 2018, and you rented it out. So it completed in 2011, and it rented this particular unit rented around that $1,500 to $1,650 a month range. You can see some examples from back in December of 2011 here, $1,500 to $1,650, same type of unit, no parking, under 500 square feet. In terms of your monthly expenses, prime rate back then was about 3.5%, 2011, sorry. So looking at 20% down with a 3.5% 5-year fixed, you'd be looking at $979 a month on your mortgage. Taxes $141, maintenance fees $267. I took today's maintenance fees rather than back then's. Obviously, maintenance fees have increased in this building by about 10 cents a foot over the last decade. So your total monthly out is $1,387 a month. We're going to take the bottom end number of the monthly rent rather than the $1,650. We're going to take $1,500. Based on that, your positive monthly cash flow is about $113 a month. So over the span of a decade, you're looking at $13,560 in sort of excess cash flow. But for our returns, we're just going to ignore that. We're going to pretend you spent that on repairs or insurance or whatever, because again, I want to keep the math kind of simple for myself here. So you sell it in 2021 at $541,000. You had $49,000 down. We're going to assume 6.25% closing costs on this when you closed on 2011. So it's about $65,000 into the deal. Your mortgage balance in 2021, after 10 years of paying it down at 3.5%. Obviously, you probably, when time came for renewal, got a better rate than that. But again, keeping numbers very simple here, we're going to say 3.5% the entire time. We're also going to say you kept your tenant the entire time and you never increased rent on them. Again, trying to keep numbers really simple here. So your gross profit number is $404,377 at time of sale for something that you invested $65,000 into. You got to pay real estate commission, of course, so your net is $377,302 pre-capital gains, which works out to 14.5% compounding annually on your down payment and closing costs, which again, fantastic result. Last 10 years have been pretty favorable. This one was purchased obviously at a rough time. We currently have 2 amazing pre-construction deals in the city, in my opinion. So good that when you look at the price per square foot on these particular deals and you compare them to other pre-construction and even other existing resale in the neighborhood, they're no-brainer, slam dunk investment opportunities. If you're looking at investing in pre-construction or buying a unit for yourself, come and sit down with me, or if I'm not available, someone from my team. We will go through everything. It's no obligations. We don't do buyer representation agreements or any of that nonsense. We used to share these opportunities via video, and we used to kind of send them out there. But other brokers would copy our stuff and run with it. So we're no longer doing that. And that's it for today, guys. Like I said, if you want to sit down and go over options, you're looking to invest or buy a pre-construction for yourself, by all means, we'd love to sit down with you. Book a meeting there at precondo.ca/meet. And if you like this type of content, like and subscribe, and I will see you guys next week.